Real estate has proven to be an excellent long-term investment. REIT stocks let investors invest in real estate the same way they invest in any other industry. Today, I will show you 2 REITs for steady dividend income with amazing balance sheets and awesome tenant portfolio. Let's start. I know you are here because you love dividend income, and I am sure you don't like to work 9 to 5 job. There is many ways to make money in real estate. 1. Invest in short-term rentals. 2. Invest in REITs. 3. Fix and flip homes. 4. Build sites for realtors. 5. Crowd-funded real estate. 6. Property management. But today we will talk about easiest way to invest in real estate with these 2 amazing dividend stocks. 1. Realty Income. Realty Income, the monthly dividend company, you can see all about their dividend payouts on their website. I love industry diversification in this REIT. Steady business, consistent cash flow, dividend yield of 4.6%, with dividend growth of 26 years. They join the family of dividend aristocrats, and we know I love that a lot. Price of these share is $63.50. O has a predominantly US portfolio with a heavy concentration in retail. O's top tenants are well-known and recognized household names including Walgreens and FedEx. Very high occupancy at all times and strong leases is why I am bullish on this stock. O does pay monthly versus the traditional quarterly payment from our next REIT stock. That is also something to think about. Let me know in comments what you think about Realty Income. Our next REIT is W.P. Carey. W.P. Carey ranks among the largest net lease REITs with an enterprise value of approximately $16 billion and a diversified portfolio of operationally critical commercial real estate that includes 1,215 net lease properties covering approximately 141 million square feet as of March 31, 2020. The first thing of note here is that Carey owns single-tenant net lease properties, which means that the tenants are responsible for most of the operating costs of the properties they occupy. The company's leases tend to be lengthy, over 10 years, providing material support to revenue during economic downturns. 17% of its portfolio in the retail space, industrial 24% of the portfolio, office 23%, warehouse 22%, self-storage 5%. WPC also has significant non-US holdings with Europe making up about 1/3 of its real estate revenue. Neither O nor WPC have any exposure to malls. WPC's top 10. WPC have strong occupancy, also more than 98%, same like O. WPC have dividend yield of 6.03%. Dividend growth of 9 years. Price of WPC is $72.20. Dividend payout is quarterly. Both dividends are very safe even in today's turbulent environment, and based on all the information, O is moving into Europe slowly and its low cost of capital should create attractive opportunities there. Over the past 15 years, both have delivered excellent returns. I hope you guys learned something new today. Destroy that like button for me. Subscribe for more investing videos, and don't forget to tell me what is your favorite REIT in comments. See you soon.